were founded in late 2009. I still remember very well calling a friend of mine, Daniel Sachs, and calling him and asking Dan if he wanted to partner in building a company. And to my surprise, Dan shows up in front of my apartment literally within 3 days, and he's there. And he moves in, and we start this ideation process. And what we recognized was this pattern that as analog and goods and services moved online, there was this pattern of aggregation whereby consumption tended to consolidate towards certain points of aggregation. And for software, especially enterprise software, there was no such marketplace. And so we looked at that and thought to ourselves, well, gee, could we address the high search cost and transaction costs of finding, buying, and managing technology services in the IT environment? And that's where we decided, well, geez, there's an opportunity here to be the leading subscription commerce platform to power the digital commerce journeys for all this huge channel that there was that was delivering IT and specifically cloud services to the enterprise and SMB environment.
As you continue to grow, there was numerous financing rounds to support the growth, but there was also a lot of M&A. What is your strategy in terms of M&A to continue to build towards your vision?
First, about how M&A fits into the overall strategy. So when we look at AppDirect, a repeatable growth strategy that we've developed is really about, first of all, category expansion. So that is one way that we've looked at M&A is how do we accelerate the go-to-market in new categories on the marketplace that are complementary to the existing verticals that we're in. The second one is about land and expand, which is about when we enter category, how do we attract the right partners and advisors? So in some cases, we'll look at acquisitions if it gives us the right tooling to enable those advisors to reach their full potential. The third piece of our strategy is about increasing lifetime value of the end customer, right? That end customer relationship. And that's all about being the leading full stack lifecycle management platform for IT. Where, what Workday is for employee lifecycle management, we want to be for IT lifecycle management. So there's also acquisition opportunities there to get the right lifecycle management stacks to help you manage everything from your hardware to your connectivity, to your mobility, to your SaaS, your infrastructure service, and also AI. And that's where, in some cases, we've thought that, hey, the buy versus build makes more sense.
You've been very successful with these acquisitions, retaining talent, as well as accelerating your own product roadmap or your geographical access. What are the key success factors behind your strategy of acquiring?
Yeah, I mean, it starts with knowing what problem you're trying to solve, right? So it's what piece of the puzzle are we trying to fill, right? Number one, and then in doing so, we have a clear objective in mind. Let's say within a given time frame, then it comes down to sourcing. It's a bit like hiring talent. Ultimately, if you have a small pool of talent that's applying for a job, it's not very competitive. And similarly, in M&A, we got to make sure that we have a large pool and a large pipeline, very similar to recruiting. And similar recruiting, yes, there's capability, but then assessing values as well. Now, look, a company may have values that are not necessarily bad, but they just don't coincide with ours. So that's not the right fit for us, right? And then, I think that really investing up front, like things like quality of earnings are a must. So I think just really make sure that diligence is very much invested in and done properly. And then there's the follow through where making sure that we have the right teams and operational rigor to be able to integrate quickly. I think we've gained knowledge and refined that over the years. Eric Boyko introduced Chris and I in 2010, I believe, right? And so we met very early on at our seed round, right? And look, I think when it comes to venture capital, it's all about the relationships and the people. So when we had met, we had met a number of firms, but it was very clear to Dan and I that we wanted to work with Inovia. And I think what's really special about our relationship is that Inovia's ability to scale with a company. Of course, Inovia has also scaled itself in a very significant way over the last 15 years.
In terms of fundraising, to build a multi-hundred million revenue business today, a profitable one, which is also great, and going towards that $1 billion of net ARR over the upcoming years, how did fundraising look like for you over the last decade or so?
So, well, a lot easier with Inovia as a facilitator. And I think it's important because I think that entrepreneurs, I mean, building a business is very time consuming, right? And you got the build and the sell motion. And look, if a entrepreneur is spending half the time fundraising versus building a business, that's distracting. And I truly believe that superpower that an entrepreneur gets by working with Inovia is an incredible facilitator and a network that's very strong. You know, Westcap came in last year. LT, you had a great relationship with LT. Westcap's been phenomenal for us as well. CDPQ as well CDPQ has been a remarkable partner, and over the years has been instrumental in so many things that we've done. So you've really at every stage just introduced us to that right partner, and I think that's part of an incredible value that you deliver.
So, talking about fundraising, you basically partner with investors, including Inovia. Why Inovia? What made you choose us as a firm, as a partner?
So first of all, let's be very clear. If I ever had an opportunity to go back, there's zero doubt in my mind that Inovia would be the partner. But that's very, very clear, right? Why is that? And also a firm that I would recommend to absolutely everybody that I come across, and I do. And so I think that there's just first of all, it comes down to the people and talent, just an amazing bench of talent. But the ability to again span the time frame from seed all the way to IPO. And be an incredible resource at each of those stages, and truly a partner in building the organization. So I think it's the time scales that Inovia can really grow into with the firm, but then it's also the span of departmental capabilities, where Inovia can all of our departments can plug into Inovia to be amplified, right? And so whether it be HR, recruiting, right, the right talent, whether it be on the accounting finance side and getting, the right matchmaking introductions in a financing process, whether it be getting the right metrics for benchmarking, customer acquisitions. We've had incredible introductions, let's say Comcast, to build our business, especially in the early days. And so M&A, we to this day get a funnel of leads from Inovia. So I think that there's this 360 capability across all the departments, across a very long time horizon, combined with the people and talent at Inovia, I think makes it a extremely compelling value proposition that I think that as a entrepreneur in anywhere in the world, you should definitely pay close attention if you have an offer from Inovia.
So Nick, you built through equity fundraises, you provided secondary to investors, to employees, you've funded some acquisition through debt and other facilities. You're on a strong run rate with a goal of achieving $1 billion of net revenue. You're growing profitably. Why an IPO, and what does it mean to actually be IPO ready?
Well, I think that's a great question. I think for me, and the way our leadership thinks about it, is the IPO readiness may matter even more than the IPO itself. I think that just the act of being an IPO grade company, I think creates a certain level of rigor and governance that I view as really important. And I think that once you're IPO ready, then when the market is right, it's really, you get to have the opportunity to time that, right? The markets are probably not ideal at the moment, but we do think that by next year we might have a good opportunity, and that we might be, from a metric point of view, at a place where going public might make a lot of sense for us.